Many experts believe that the US is now in a bubble.
Let me put it this way. We're in the early stages of running out of raw material. Of course, we live on a finite planet. There's only a certain amount of cheap oil, cheap nickel, cheap copper, and we're beginning to hit some of those boundaries.
First half of 2022. My target is this first crash. It's only the first crash of the bigger crash over a couple years. This is the beginning of a long-term bear market.
One that could burst at any given time, which could lead to a major crisis. Jeremy Grantham, Chief Investment Strategist at GMO, an asset management firm that managed more than $70 billion in assets in the first quarter of 2022, recently touched on this issue and what role other global issues such as climate change play. We've done videos on Jeremy Grantham before, and we know he has intricate knowledge of economic bubbles in the US. Make sure you stay until the end of the video to learn more about the current economic situation. Before we dive into the interview, we'd like to express our sincere appreciation for the support you guys have shown our channel so far. Stay tuned as we'll produce more finance content for you.
And I am sympathetic to the argument, what am I supposed to do? The yields are so low. But the market doesn't care that you don't have easy, safe investments to make. And your desperation is your own matter. What it does is focus on the difference between short-term and long-term. On the short term, you can say, I'm offered nothing by fixed income. I get something out of stocks, even though it's half what it seemed to be in the yield. It's still better than nothing, therefore I'll do it, and the prices rise. And that is a logic that you hear one way or the other all over the place. And then there's the argument in the long term, which is, in the end, all assets equal replacement cost. House prices go up, but if you can build one at half price, you put a ceiling on it. If you can create a new company at half price. I am a great fan of venture capital for this reason. 60% of the Grantham Foundation for the Protection of the Environment is already in relatively early stage VC. And we are in the business of creating new values from ground zero. We are not in the business of trading overpriced assets that have been bid up because people are desperate.
In this clip, Jeremy Grantham says that although he recognizes the lack of yields, it all boils down to choosing between the short and long term. According to Jeremy, in the short-term situation, investing in stocks is still a more viable option than fixed income alone, even with low yield levels. He then explains the long-term side of the equation, highlighting the concept of venture capital, wherein they invest in emerging companies. In this following clip, Jeremy Grantham brings up a few great points about American capitalism.
Huge difference. Another difference, by the way, since I'm on the topic of VC, is that American capitalism in particular has become a little fat and happy, is how I like to describe it. It's too monopolistic, it has too much political influence, it gets the laws of the land changed in its favor, whether they're environmental or tax, and they've simply learned to be less risky. Why start an exciting but risky new enterprise when you can buy your own stock back? And so they do buy their own stock. And that burden of starting the new enterprises passes down the pipeline to venture capital. And we have never seen more interesting opportunities. Venture capital, not surprisingly, has a higher return than the stock market because of the riskiness of each individual unit. But if you have a diversified portfolio, you have no more risk than the stock market, but you have a higher return. And the green VC part of it, which is springing out of the woodwork, is going to have a very high top line growth rate. Of course, electric cars are going to pound to death the growth rate of gasoline cars. Of course, wind and solar is going to overwhelm gas, electricity, and storage is going to be epic, and energy efficiency. We are going to take tens of trillions of dollars to green our economy, and we must do it. And those opportunities, unlike building walls along the Palisades with FDR and creating handsome-looking parks, the green investments that we should be making have a high societal return. When you insulate a northeastern house, you get a nice cash return saving for 30, 40 years. when you improve the electric grid, that would be a great idea, and China is surging ahead as we speak. You get a handsome return in savings. Instead of losing 15% at 500 miles, you lose 2%, and so on and so forth. And we are letting China get a running start on transmission, on wind, where they dominate, on electricity, where they dominate, and even in electric cars. They have 300,000 electric buses, and the US has 400.
He first pointed out how politics has plagued American capitalism, which has made investors less risky. Instead of starting up new companies, investors instead buy their own stocks. The necessity of starting up a new company is then passed down to venture capital, which has opened doors to profitable investment opportunities. Furthermore, Jeremy Grantham called out the efforts of the government to green the economy. He states that the government should make green investments with a significant cash return, such as improving the electric grid. He further criticizes how the US seems to have fallen behind China in establishing a greener economy, particularly wind, electricity, and even electric cars. Let us now watch as Jeremy explains the Fed's role in all this and how they affect short-term and long-term investors.
I've spent my entire life fighting the Fed, frankly. And what I will say is this, that typically the Fed wins many more rounds than we do, than we have. But in the end, we've had a knockout. In the end, the Fed has not been able to keep the tech bubble going indefinitely. It sent it over the 21 times earnings of 1929, and it sent it up to 35, but it couldn't go on indefinitely. Even Japan, that went to 65. The price they paid when you finally knocked it out was, here we are, 31 years later, not even faintly close to the high of 1989. If you go into their real estate market, which was an even bigger bubble, I think the biggest bubble, including the South Sea bubble ever, or tulips, they went down for 30 years, and now they're bottoming out, maybe, but they're bottoming out in central city prices at a quarter of where they came from. The land under the Emperor's Palace in 1989-90 was indeed worth the state of California, to give you some idea. But we spent a day or two checking it out. It really was true. And the price you pay for that is you could be 50 years later and still not back to that level again.
So don't fight the Fed, don't fight Mother Nature. And when the two go head to head, and what you just described, gravity usually wins. When you hit too high, you're coming down. It doesn't matter if you're the Fed.
I would say don't fight the Fed if you're a short-term player. But if you're a long-term player, you have to be prepared to fight.
In this clip, Jeremy Grantham firmly advises against going up against the Fed, adding that they are most likely to win according to his experience. Jeremy also touches on how the Fed could not preserve the tech bubble, which eventually popped and lost significant value. He added Japan's real estate bubble as an example, which has been going down for 30 years and is approaching the bottom. Jeremy summarizes his thoughts by stating that short-term players should not fight the Fed, while long-term players must be prepared to go up against them. In this following clip, Jeremy explains how urgent a green economy is with regard to climate change.
I'd like to give you an example of the difference between short-term and long-term, and that is, I've been a fanatic on climate change for 20 years, but it was only in 2007 that I first wrote a paper urging people to take it seriously. And what has happened since then? We could never say that the next quarter or the next year was going to be troublesome for oil stocks, which is, if you will, the anti-climate portfolio. But when the smoke cleared, oil as a percentage of the S&P had come down from 25% in 1982 and 16% in 2008 to 2.5% yesterday. This is the biggest loss of value in the history of the major groups of the S&P. That goes all the way back into the 20s. It's really been remarkable. And yet you never knew when it was going to happen. No one ever made a case that the next year or two would be such a bloodbath. But you were on the wrong side of history if you owned the oil stocks. Now you can't. It's too late now. The last miserable 2.5%. You can't get rich going short that even on the way down from 25 and 15. What a good demonstration of the long-term, slow-burning, who knows what the time will be, but you know in 10 or 15 years it will bite. And that's what the rest of climate change looks like today. You don't know how fast it will move. You don't know when the US government will wake up and start being a leader once again, but it will probably all happen, and it will go in bursts, and some of the time it will be much faster than you imagine. But you will come back in 10 or 15 years and you will see that we have made an enormous transition to a green economy. We will win technologically. The problem we're dealing with on climate change is not whether we will win, but whether the world will still be worth having when we win. It's the damage that's accumulating day by day already, as you can see around you with the fires in Australia and California, and the number of hurricanes, 2 at a time for the first time ever. And the amount of flooding, which is the single most reliable part, heavy floods everywhere, and the threat that poses to global agriculture.
Jeremy has been a known advocate for a greener economy due to his goal of curbing climate change. He emphasizes how oil stocks have lost tremendous value over the past few decades. He states that investing in oil stocks will no longer be profitable as the US transitions to a greener economy. Jeremy summarizes by restating the urgency of adopting a greener economy. As carbon emissions continue to adversely affect the environment day by day, the problem that Jeremy emphasizes is whether the world will survive the transition to greener economies. However, Jeremy explains in the next clip how going green could actually jumpstart the world economy.
We've talked a little bit about the unique nature of the current economic downturn being virus-driven and the extraordinary policy response of zero rates, printing money, unprecedented deficit spending. How do you see this ending? Is this a happy ending, or is it something that is going to mark history?
Well, I shouldn't pretend to be unbiased at being green. I'm not into politics, but I am into greenery. And that has dragged me willy-nilly into politics. We will have deficit spending, which will be great. And a lot of it will be green, which will be even better and very high return. If the globe was to embark on a massive green stimulus program, which it should, it's necessary. But if it does it, it will give a shock to the economic system that may kick us out of the rather dreary, slow decline in growth rates of the last 20 years. This has not been our finest age. We have been carried on the broad back of China and India and so on, but the developed world has been slowly but steadily losing its growth rate. And one of the reasons is that after the financial crash, we became too jittery about deficit spending, which is, I think, a big mistake, quite unnecessary. As long as inflation is not really gathering steam, when you find yourself facing a slowing global economy, you have to kick it in the tail. And it needs massive government stimulus on a sustained basis. And what an opportunity to match that with the massive spending we need to green the economy. You end up with no particulate matter, which takes years off everybody's lives and kills several million people a year in China from coal and so on, and diesel. What an opportunity to have a win.
When asked how the current economic downturn will turn out, Jeremy Grantham returns to the importance of greenery. He further emphasizes that the US should centralize deficit spending around green policies, which may kickstart the economy and allow it to recover from dwindling growth rates. Jeremy also adds that government stimulus should be spent on greenery to restart the economy. In this interview with Jeremy Grantham, he emphasized the importance of a green economy multiple times, and how this may be the key to saving the planet and the economy. He also briefly touched on the benefits of venture capital and how this opens up growth opportunities. Furthermore, he explains the dire situation of the environment and the economy due to climate change. The biggest takeaway for viewers here is, first, to invest in venture capital by investing in startup companies with huge potential. And second, is how critical it is to transition to a greener economy. Not only would it benefit our Mother Earth, but it would benefit economies and, of course, the people. What did you think of Jeremy Grantham's analysis? How do you think the US will get out of this precarious economic situation? Give us your thoughts in the comment section down below. If you enjoyed this video, kindly like and subscribe, and we'll catch you on the next one.